The stock market has absolutely exploded on Monday morning after news that the US has reached something of a trade agreement with China. Tariffs are going to be reduced at least for the next 90 days. I'm going to get to all those details and the companies impacted, but the stock market is just going crazy. Right now, the S&P 500 is up 2.5%. NASDAQ is up 3.6% on the day. And even the Dow Jones Industrial Average is up 2.4%. So let's dig through exactly what's going on. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with a heat map of the S&P 500. This just goes to show exactly where the biggest moves are. You can see a couple of players that you would expect to be moving big on China tariff news. Apple, most of their product that's coming into the US is made in China, so they're going to be a big beneficiary. The other one is Amazon. Amazon may not be the first company that you think of when you think of impact of Chinese tariffs, but about 70% of their product coming into the US is actually made in China. Even if it's not an Amazon purchase product, they have a lot of third-party sellers. It's most of the volume that goes through their website now. So they're going to have a huge benefit. Tesla also up big on the news. I'm not sure exactly if this is going to have a giant impact on them, but they do import most of their batteries for the energy storage business from China. So that's where we're going to see that impact. Doesn't help their demand problem that they've been dealing with, but there could be some impacts there. Let's go through what we know right now. Scott Bessent was on CNBC this morning, and what he talked about is a 90-day pause in the high tariff rate that we currently have on China, 145% in total. What they're going to do is reduce the reciprocal tariffs that were originally started at 34%. They're going to bring that down to 10%. The fentanyl tariffs, as they're called, which were put on earlier this year, are going to remain. So in total, there's going to be a tariff of 30% on goods coming from China. Now, this is a pause, and this is going to lead to further negotiations, but this is really what the market has been hoping for, is that the worst of these trades and empty ships and orders slowing down from China, potentially empty shelves going into the summer season and even the holidays. Remember, retailers are already starting to make their orders for the holidays right now. So that was the real concern, is that this is going to really start impacting the U.S. economy in the relatively near term. Already seems like it's already starting to impact the Chinese economy. So some sort of deal framework is good. They do want to protect certain industries like steel, like pharmaceuticals, like semiconductors. So the devil is always in the details in these trade negotiations, and exactly how much is going to be pulled back to the US, how much is going to be just returning to normal that we had a few months ago. That all remains to be seen, but at least some sort of semblance of normal or predictability over the next 90 days is exactly what the market was looking for. That's why there's so much excitement. And even this morning, President Trump said that what he's ultimately looking for is more access to the Chinese market for US businesses. So we ultimately don't know where tariffs are going to end up, but we're not going to be at 145%. So it's not going to be as devastating as we thought it was just a few days ago. Now, the other thing we need to keep an eye on, and this is going to have a big impact on businesses, on the US government's costs, and on markets overall, that is Treasury rates. Right here, what we have is the 10-year government bond rates. This is for different countries all around the world. This data is from Bloomberg. You can see the United States rate. This is one that I keep an eye on. It's down over the past year, but in the last day, up 7 basis points. So 0.07%, now 4.45%. That rate continues to rise since these tariffs were announced. And what that is telling you is that investors don't see treasuries as being quite as safe as they once did. If there was a flight to safety and people were buying treasuries, those yields would be going down. But you see, yields are going up, and they're going up all around the world. So that means the market is thinking that there is still a significant amount of uncertainty for bond investors all around the world. There's a risk on trade going on the stock market today. That's why stocks are up. But there's really a risk off trade going on in bond markets. When those two things differentiate, when they're not moving in the same direction, that's when you really want to be a little bit concerned about what's going on. So keep an eye on earnings, keep an eye on the economic data as it comes out, because sometimes these speculative moves that we get on days like this that aren't driven by fundamental news, they're driven by some sort of news like tariffs going up or tariffs going down. They may not be sustainable if the ultimate impact is slower trade, more uncertainty for businesses heading into the holidays.
Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.
The other big piece of news coming from the White House is an executive order that President Trump is expected to sign this morning that is going to lower the price of pharmaceutical drugs. Now, when this news broke late last night, it's really unclear exactly how this is going to happen, but this seems to be a focus of the administration, is trying to lower the cost of pharmaceuticals because the US does pay significantly more than most countries around the world. So what investors are responding to is who's going to benefit if the price of drugs starts to come down. Hims and Hers is one of those companies I have talked a lot about on this channel. That stock is up 11% as I'm recording right now. Others are moving in the opposite direction. Eli Lilly down 1%. That's when the market is still up over 2%. So that's a big differentiation. Novo Nordisk is down 1.5%. So at least for today, money is starting to move to these companies that would benefit more from lower cost medicines, lower cost drugs like Hims and Hers, and selling off companies that are benefiting from those higher costs, those higher margins that they're getting from selling some of those drugs at very elevated prices to US customers. So that's going to be another thing to watch. Again, we don't know exactly what the executive order impact is going to be. The US government does not control the price of drugs for insurance companies, for example. They do, however, control Medicare and Medicaid and what can be paid for those plans. So there could definitely be an impact coming from that executive order. Something to keep an eye on. We have tariffs in the news today, pharmaceutical drug prices in the news today, a lot of potential impacts. If we go back to the heat map, one of the things that I'm going to be watching this week is a bunch of earnings reports, on holdings reports this week. Going to be interesting to see what they say about tariffs, what that impact is going to be. That's another international company, but Crocs is another one that reported last week. That's a stock that I own. They said that their impact of tariff, not necessarily going to be enormous, but they were going to have an impact from tariffs at that 145% rate. That impact will likely come down. That's why that stock is up. You see similar moves in the retail space today. Nike is up 8.3%. Deckers Outdoor is up 6.1%. I think it's interesting to see that not all retailers are up. Walmart is actually down. Costco is down a little bit, but a company that may have been a little bit more impacted, a little bit higher margins, a little bit higher price points is Target. Target is up 5.5% on the day. So definitely a bullish move for the market. One of the things we learned from earnings reports over the past couple of weeks is that the first quarter, I think, was pretty good, but there's a lot of uncertainty heading into the second quarter and what the impact of tariffs would be. Seems like these tariffs are going to be at least on pause before the major impacts were going to hit most companies. That's probably good for earnings, at least for the second quarter, but we'll see what the details are. The market is obviously reacting before we have any finalized deals. That may not even come in the next 90 days. But positive news, at least for today. Let me know what you think about the market's moves today. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.